Welcome, guys. Welcome, everybody, to the first-time homebuyer class / home seller workshop, and also repeat buyers. It's really good to sit in a setting like this for many different reasons. But one, just taking the first step, come in here, you're going to have other people with different questions, and we like to do it classroom style. I always wanted to be a teacher. I've been teaching this for about 20 years. And I took it after, kind of took the baton from my parents. My dad, who just left, spoke about veteran benefits, and he's taught this first-time homebuyer class for about 30 years here in Ventura County. So we've helped a lot of buyers here locally buy in this real estate market, and some of you may realize that this is one of the most difficult markets to purchase a home in, right? And we're at a time right now that one of the biggest challenges, one of the questions I'm gonna have for everybody is, what is the biggest challenge right now preventing many people from becoming either homeowners or buying a home in the Ventura County market? So, and then I got a couple great people that we got to sit down with here recently, and thank you guys for doing it. We did a buyer consultation. So you're gonna hear some of the things that we talked about before, but we're gonna get into a lot more detail of what's happening in the marketplace and different key factors of what you're gonna wanna look out for. So, I'm typically not a PowerPoint guy. We did a PowerPoint just to kind of, some people appreciate it and also to keep me on track in terms of moving in a certain direction. Every one of these classes are a little bit different though, based on what it is that you're looking for. So I guess before we get going, thank you again for your time and commitment to be here. We're gonna do about a 90-minute session. To do this justice, it's literally like a 3 to 4 hour class where you do 2 hours of the real estate side, 2 hours of the lending side. We're going to do as much as we can in about 90 minutes, okay? So it's going to be quite a bit. If you got to get up and leave and go to the restroom, take a call, feel free to do what you have to do there. And then please ask questions as it comes up. You know, the more we engage, the better, okay? So let's get going. Just to start with, in the real estate market today, who's aware, and we talked about this a little bit with the agents earlier, but what do you think the biggest challenge is to becoming a homeowner in today's market? Money? Well, and when you talk in terms of money, what do you mean specifically with money? Like just in terms of down payment, affordability? Is that where you're going with? Like affordability, like monthly payment?
Yeah, I guess.
Okay. So affordability is the biggest challenge right now, right? And does anybody know roughly how many people in the state of California or Ventura County can afford to purchase at where the average purchase price is at? Just ballpark if you had to guess. It's less than 10% right now, okay? So less than 10% can qualify to buy an entry-level home, and this isn't to start off with depressing news. This is just the reality of what it is that we're looking at. So the average, does anybody know ballpark what the average mortgage is right now for buyers that are purchasing in this market? On average. Doesn't mean everybody. What'd I hear? A million purchase price. That's pretty close for a detached home, right? And I'm gonna go through and you're gonna see some market stats. What we're really gonna emphasize today is the opportunity of what's available today versus what wasn't available before when the rates were much lower, okay? Now the rates are trending in that direction, but many people are waiting and trying to hold off until the rates get lower so that they can handle a payment. And the average mortgage right now is between $5,000 and $6,000 for many people, right? What do you think the average rent is right now for a 3-4 bedroom in Camarillo? About $4,800, $4,500, $5,000 a month. So the housing expense along with everything else has gone up, right? In terms of mortgages in the past, we were trying to have mortgages around $3,000 or under $4,000. It was always, let's try to keep our mortgage close to $3,000 a month, right? That's what many people are still accustomed to who purchased back when the rates were much lower. So many people, the average person would live in a home for about 7 years. Does anybody know roughly what people are staying in homes today? Ballpark?
10 to 12.
About 12 years. 12 is the average right now that people stay in their home before they sell and they move. And a big part of that is because they have a very low interest rate. They have a bunch of equity, but they have a low rate and they don't want to double their payment, right? So what we're going to talk about is what's happening right now, what opportunities are out there right now that you can take advantage of this market, but it's not easy, meaning it's expensive. It's expensive to purchase a home, but there are programs out there. And one of the things we're going to talk about is down payment assistance programs for first-time buyers, right? And I just got off the phone with the city of Camarillo yesterday. So let's go, I guess I'll go a little bit with, I hate to talk about the history, but just to talk a little bit about it. So about the speaker and the home buying process, go ahead and do the about the speaker. So I started in 2004 is when I got my license. Graduated law school in 2013. I'm second generation into it. I was a director of realty 2013 for VCCDC. Raise of hands, who has heard of VCCDC in this room? Okay, we got a couple, the agents, a few of the agents. What do they offer? What's their big thing of why you want to know this name? And just, if you're taking notes, I would write down vccdc.org, especially if you're a first-time home buyer. I helped a gal who just bought a home less than a month ago, who was able to get $50,000 from the city of Camarillo, down payment assistance, right? She also got $120,000 from VCCDC. And now they're called A New Way Home. They've actually changed their name, so it's A New Way Home. Most people are not aware that there is down payment assistance available for first-time buyers. So I'm going to get into some of the details of it. Now, not everybody goes this route, but if you are able to take advantage, especially in the news with the $50,000 with City of Camarillo, it has to be a purchase in Camarillo. As long as you do any kind of traditional 30-year loan, it could be VA, it could be FHA, it could be conventional, and we'll talk about some of those details. As long as you do any of that, you can still qualify for this $50,000, but there are income requirements and restrictions for it, okay? And we'll get into some of those details. So that's the first thing I want to make sure everybody's aware of. There are programs out there, right? But as I said at the very beginning, it is very challenging to qualify, not qualify, but to afford where the payments are at. But if you can do it now, you can take advantage of the market now, you're going to get a much better buy on the property and be in the area you want to be. And we are, I hate to say, banking on the rates coming down, but what I'm going to do, because I shared with a couple people in here, I bought my first home in 2004 in Mission Oaks in Camarillo. I bought my most recent home we bought that in 2017 in Central Camarillo. At that time for about $575, right? 2017, 1,500 square feet, 4 bedrooms, 2 baths, nice sized lot. And I just recently put that on the market and I have it in escrow. And I bought another property that I was helping a buyer purchase, and it was too much for them. Needed a new roof, needed some other repairs and things we're going to talk about during the due diligence period, right? But what happened, we already negotiated great credits for that buyer, but it was too much work that needed to be done. They were actually here earlier. And so they were like, well, if we're going to spend that money, why don't we just go up to a little bit higher price point? And the property is already fixed. So that's what they did. They canceled, pulled out of that property, that escrow, and we're going to talk about what your out-of-pocket expenses are and how you protect what's called an EMD, your earnest money deposit, okay? We did that, protected them. They got out of that transaction, went forward on another property that is more ready and done, went up to a higher price point, but they were already going to spend that money because they were moving in with their father and they needed another bedroom. This place was a 4-bedroom, they needed a 5th bedroom. So instead of spending $100,000 to $150,000, not just to fix the place, but also add an extra room, they were just like, well, why don't we just go up in price point? And they did. They went up to a higher price point than where this property was, bought that property, it's more ready to go, and we still negotiated a 3% closing cost credit. And I want you to make sure that you're all aware of what that means. At 1.2 is what they bought at. 3% is $28,000 that the seller is paying towards their closing cost, right? Now there's things you can do and you'll be told different things that, well, if you don't use all the closing cost, then you lose it. That's the way the contract's actually written up. So you can pre-negotiate and put certain language in there so that if the closing cost is, let's just say $14,000, but you negotiated $28,000 in credit, you want to ask your loan officer, number one, what's the max limit of credit that this underwriter can do? This is a very important thing to ask. Because let's say they got 50,000, but the max limit that the lender will give is 3%, you lose everything else. And you were better off getting repairs, or what we did in this situation, we got the seller to agree to pay for invoices from contractors for that difference. So not only are they getting all their closing costs covered, that difference, the additional 14, is going towards other repairs that the seller's going to pay for out of their proceeds so that the buyer doesn't have to do this. Okay, does that all make sense? Is that too much already? We jumping into too deep, too quick? Well, let's get going. So it's a little bit on the history in terms of what's going on. Wanted to ask just why is the goal of home ownership important? Just in terms of, does anybody feel comfortable just sharing of why? Do you mind sharing just in terms of why does becoming a homeowner important to you?
So my name is Adrian Garcia. I was born in Mexico. I traveled a lot. By the time I was 13, I had already moved, I think 13 times, 2 different countries, 2 different states, and like, I don't know how many cities. There was no stability. We want to have kids in the future, but we don't want to do it without, stability. So that's why owning a home is important for us, because we don't want to bring life into this world without that stability.
So stability is very important to you, right? Creating roots. And that's what, when we look at purchasing a home, the statistics show that if you are a homeowner, your children have a much higher probability of going to college, right? That stability, I grew up as a Navy brat, so I moved every 3 years. And thank you for sharing that story. That's phenomenal, and you're gonna get it. As we've talked about already, when people are locked in on the goal of home ownership and they know they wanna do it, there's always a way, if you're willing to do it. But the hardest thing to do is what they've already done and taking that first step of sitting down and having a conversation. Now, certain things have changed just in the last 2 years. You may have heard of the NAR settlement. Is anybody aware of the NAR settlement where they talk about buyer commissions and seller commissions? Have you heard anything about that? Okay. Well, this is a very important thing that passed last August, right? And there was a lot of news and a lot of headline on it. Well, what's changed now is that you have to have a buyer representative agreement before you go out and start showing properties. For an agent to show a buyer properties, to actually be following the law and not get in trouble where I could get fined, I have to have a buyer rep agreement signed. Well, my dad, who just left, taught the homebuyer class forever, and his biggest thing he was proud of is he never required a buyer to sign a buyer rep agreement, right? Well, that's changed now on a national level. So what it does, unfortunately, is it puts a lot of pressure on the buyers to now decide who they're going to be under contract with, right? And they may have just met them at an open house. So we're going to talk about, if you want to switch to it, we can go to picking an agent. But basically, there's things you can do. And through this class, I'm hoping you get ideas of what questions to ask your agent. Because when you commit to them, number one, it can't be for more than 3 months. 90 days, right? If it's longer than 90 days, it's voidable. It could be as short as a week. It could be as short as a day. So you can vary that time frame. You can basically, just to follow the law, you can do a 1-day showing and go check a property out and just see 1 or 2 properties and kind of get a feel for that agent before you commit to a 90-day contract. Now, you can also do what's called exclusive or non-exclusive, and we'll get into that. So we talked about the benefits of home ownership, right? And I wrote 5 main things or 4 main things here. 1, 2, 3, 4. I got to count. So tax write-off, right, is one of the biggest things that as you become a homeowner, when people are trying to figure out your budget, the biggest thing you want to figure out are 2 things. People ask the question, when's the best time to buy? Does anybody know the answer of when the best time to buy is? Yesterday? I like that. What was that? I heard now. What was that? When it's the right time for you. Meaning you financially can handle the monthly payment, right? The monthly payment is within your budget. That you know, yes, we know that you might bite off a little bit more right now if you go on a traditional loan. That's the reality. I was not expecting to take on the mortgage that I'm taking on right now, but the opportunity is in front of me. So what I did, and I normally don't recommend to do this, but I spoke to my CPA, and my CPA is like, are you doing a traditional principal? It's called PITI, principal, interest, taxes, insurance, right? are you doing that on a 30-year fix? I said, yes. And he said, why? And I said, what do you mean, why? He's like, you're in the industry. Do you think the rates are going to come down? I said, yeah. He's like, are you pretty certain? I said, yeah, I'm pretty certain. He's like, get in on the property that you can. He's like, I'll do interest only, and you're going to save about 30% off of what that monthly payment is, right? So instead of, and I'll just throw the numbers out there, instead of $6,300 a month with principal, interest, taxes, insurance, comes out to about $5,700 a month for the same property. Now this is the thing. If I want to pay $6,300 still, I can still do it, right? I can still knock that principal down every single month, and that's what we've always done, and it's one of the tips, is you want to figure out what your monthly payment is, divide it by 12, whatever your total monthly payment is, divide it by 12, add that onto your payment if you can do it. Suppose you'll pay off the loan in almost half the time. It knocks in, we got Jeff Baum, he's walking around here. Jeff Baum is a mortgage broker, so he's actually back here. Jeff, when you divide the mortgage payment into 12, right, and on a regular PITI loan, and you make that additional difference, dividing that by 12 and pay it every single month, do you know roughly how much life of the loan you knock off? About, I'm putting you on the spot now, dude.
Yeah, you end up making an extra 2 payments, 3 payments.
Okay.
Totally.
Uh-huh.
So I think it drops you to like 23 years, if I remember correctly.
So yeah, so it's somewhere,
substantial.
I've heard somewhere between 17 to 23 years. So it knocks quite a bit off. That's if you want to do that, right? So what I'm saying is right now you want to secure the property that you're looking for and look at, don't get on an adjustable. Be on a 30-year fixed, whatever it is. Get on a 30-year fixed. But if I want to pay principal on top and still pay the 63 that I was already going to pay, I can do that every single month. But now I have the option without missing a payment of going the other way, okay? So just wanted to bring that one up. So in terms of appreciation, when you purchase real estate, and Ken made the point earlier, as long as you buy for the long term, you're going to be okay. But where people can find themselves in trouble is if they have to sell a year, 2 years from now from when they're purchasing it today, even though we don't see any signs showing that the market's supposed to correct or come down in price, the correction's already taken place, if you weren't aware. The prices have already settled down in Camarillo to about as good as we think we're going to see it. And we know that based on a statistic that's called the absorption rate, okay? The absorption rate is a number indicator that tells you how many months inventory is going on currently here in Camarillo or Ventura County. So the absorption rate in Camarillo is under 3 right now, still. What that means is that's less than 3 months inventory. To be in a neutral market, that's between 4 to 6 months inventory. A buyer's market, which I hear a lot of people say we're in a buyer's market right now, it's not 100% true. It's still a seller's market. Anything less than 4 months is still low inventory, is still in the seller's favor, right? So you're going to hear things that you're going to be like, well, wait a minute, you said it's a seller's market, so it should be in the seller's benefit. Well, before, the inventory was at less than a month's inventory. We were at like 0.6 absorption rate. We had about 60 active homes in Camarillo. Does anybody know today how many roughly active Camarillo homes you have on the market? Ballpark?
90. 120.
Right around there. About 120 to 140. So we were at 60 for almost the last 5-6 years. We were well under 100. We're at about 120. So we've almost doubled in inventory. Now the reality is even though we're still at all-time low inventory levels, so it's still in the seller's favor to an extent, there's a lot of fear out there right now from sellers and buyers, which creates opportunities specifically for the buyers in negotiating right now, okay? A lot of opportunity, and I know based on the buyers that we're helping and the credits we're negotiating, the repairs, the property I'm buying, I'm getting the roof paid for by the seller. Our first quote was $38,000 for the roof. We ended up getting it down to about $20,000, right? But it's a big 1,800 square foot roof. They got to rip off the wood shake and the tile, and it's a complete re-roof. They're not just adding shingles on top. Seller's paying for that, okay? We also got another on top of that, $20,000 on top. So we have almost $50,000 right now that we've negotiated in credits on a property that started at $1 million and went all the way down to $960,000. So it's in a neighborhood of homes that are selling at 1.1 and 1.2. You were not able to pull anything off like this 2 years ago. I promise you that. Instead, it was the opposite. You were writing 100 to 150 to 200,000 over asking price, bidding between 14 to 20 other different buyers all running in. This is why I'm saying that when you make moves when everybody else is having a hard time doing it, that's when you're going to take advantage of the opportunity. Does that make sense? Okay, so those are some big things I wanted to make sure. Stability, roof over your head, so NTT. This is just another quick story. NTT means notice of termination of tenancy. So I have a few stories of people who have called me up pretty much in tears that they just got their notice that their landlord wants to sell their home. You're going to hear a lot more of that happening. Okay, so if you are in a tenant situation and you're renting, just not saying it's going to happen, but just because you have a year on that lease doesn't mean that they can't sell the property before then. They don't have to wait till you're out. A lot of times they want to. They give you what's called a notice of sale, right? Then they can give you, usually if you're in there for at least a year and a day, normally you're told you get at least 60 days notice. There's actually something that's on the NTT form that says if they haven't given you written notice, they can give you 30-day notice as long as they go to sell the property. And I know this because it's a past client of mine who sold his property like almost in 2013, rented for a while, and he thought he was in a good setup. And then he hits me up and he's like, dude, I just got hit and they want to sell their house in 60 days. And he's like, and now I'm not ready. I thought we were good. My kids are in school, everything's happening. So if you want to take control over your housing situation and fix as much as you can fix your monthly payment, becoming a homeowner allows you the power to do that. Most importantly, does anybody know roughly what the net worth is of the average homeowner right now as of 2025? Try not to look, don't cheat. What do you think it is? Guess, just guessing. 200, that's a great guess. Any other guess? What do you think the average net worth is? Mostly through equity in a property. What would you guess? What do you two think? What do you think? You already looked. Well, at least you're honest. At least you're honest. What do you think?
We owned our house for 34 years, so I don't really know.
Okay. So the average net worth on a national average, if you look, and you know everything on the internet's correct, right? Especially with ChatGPT. $430,000 is the average net worth of a homeowner. $430,000. Do you think with the high cost of living, especially in Camarillo and Ventura County, do you know how long it takes to try to save that when your housing expense is up, when Starbucks and every other thing, fast food is where it's at, gas, everything else is up? It's almost impossible. Everybody's just trying to make ends meet. And I've seen purchasing and taking that first step when everybody else was telling you, no, you can't afford it, you can't do this, it's too expensive. I have a gentleman that was in the military who Ken and I met at an open house, and he got kicked around for about 3-4 years because he was referred online to a military agent, all these different things, and his mom makes him come into the open house and we start chatting. And within a week, we had him in escrow on his first purchase. He got closing costs covered. He got VA funding fee waived. He got 100% financing, so no money down. He literally said he bought a home for $500. His home inspection was $500. His appraisal, actually, he did pay a card for an appraisal. That was $600. So for $1,100, he's now a homeowner. He took me to his family function to introduce me to everybody. There were about 30 people there. He's the only one that's a homeowner right now. The other gentleman who passed away recently was the one who always told him you could do this. But if he listened to everybody else, he gives up. Just randomly, he comes into an open house. We start chatting. We connected. He comes in. We do exactly what we did just last Friday. We start there. He gets qualified with Jeff, gets his numbers figured out. So we already knew everything before we got together on that Wednesday. We check a couple places out. He falls in love with the one. We write. We get it accepted. It had been sitting on the market for 100 days. So again, if you're taking notes, what you want to look at for these opportunities. Some of you have heard me teach this before. I call it bucket A and bucket B. Bucket A is what everybody wants, HGTV. Just hits the market. It's priced exceptionally well. It's perfect at the price it's at. Do we think it's going out at that price? It's going typically way over, right? What What did your buyers, when they wrote just recently, about a month ago, property hits at 950 in Newberry Park, right?
Yeah.
Big, huge yard, pool, everything else. How many offers did they get?
14 offers.
14 offers. And the neighborhood's around 1.12, so it went out a little over 1.1. That's still happening, but that's like 1 out of 10, 1 out of 20 properties. So don't be discouraged by that. The other 90% of the homes that are on the market are like what my veteran just pulled off, sat on the market for 100 days. There were 3 others in the same condo community that were still available. So we asked for $13,000 in closing cost credit, and he starts pushing back on me. We wrote full price. It was at $385,000. They dropped the price to $385,000, been on the market over 100 days, and the other agent, won't say who it is, but he's pushing back, and I said, what are you hesitating on? We wrote a full price offer and asked for $13,000 in closing. I said, do your job, get this done, right? He's like, oh man, you don't understand. I said, let me make a video real quick. So I do these, it's called BombBomb videos. I send it with my offers as well in terms of how I package it. A lot of our agents do the same thing. So I make a video for him because we're dependent on the listing agent being able to persuade their seller to make the right decision, right? In that situation. If they countered us or negotiated with us, this home had been sitting on the market for 100 days. There's 2 others literally in the same community right there that are for sale. We can pick any one of those 3. Do you think it's probably a good idea to say yes to that offer and pay the extra $13K? Well, guess what the magic number is that we teach listing agents if a home's sitting on the market for a period of time? What do we tell them to drop the price by? Just guess. 3%. 3% is what we tell them to drop the price by. $5,000, $10,000, it's not a big enough splash. If it's been sitting on the market and they're getting no showings, no activity, minimum 3%. So why wouldn't I, as a buyer's agent, try to negotiate a 3% credit? Or we could just wait, let them sit it out, and then guess what they're going to do? Drop the price by 3%. So why not, if the property is already going to appraise, and that's what this market's created, homes that are priced under market value from where the other comps are at, you're going to get the appraisal, and you can get the credit, and everybody wins, right? So made a quick little video. They sent it over. The agent thanked me, and he said, thank you, you're a closer, is what he said. And I said, well, I appreciate that, but I want to be like, this is what you should have did. You know what I mean? You should have told them, let's do it. But those opportunities are out there. Yes, Ken?
I just want to bring up a couple points as he's talking. I work with Brandon. First of all, I just ran into this. We had a client. No one's allowed to ask you for money for your services as a realtor. We're
Right.
not allowed to take a dime from you.
Up front.
And there was, we just ran into a Hispanic couple that were being taken advantage of. They asked, this person asked them for $20,000 for them to find them a home.
Up front.
Up front, totally illegal. And we they wanted to buy a $330,000 condo. This condo had a $700 HOA. We ended up talking to the lender. They had the specific lender, and I said, hey, what could they buy on a house? Well, there's a program called a Cal FHA Second. You can write that down. They were able to get a
It's Cal HFA, but it's very close to FH, but
Or
Cal
Cal
HFA
Yeah.
second.
So they were able to buy a $500,000 house with $4,000 out of the pocket. And they're closing right now as of Monday, and they can't believe it. They cannot believe it. Now, one thing that he was talking about the tax benefits. If you have a condo or a townhome, the HOAs are not tax deductible. If you take that $700 and you apply towards the mortgage, not only can you qualify for more, but it's tax deductible. So for example, we're not allowed to advise you on taxes, but an average tax savings, if someone's paying, let's say you're paying rent, and you say, hey, I can afford $3,000. Well, the average tax benefit per month that someone's receiving is $600 to $800 extra. So now that payment that there was $3,000 can go to $3,800, and you don't even know that. But what Brandon was saying about credits, this is what I wanted to bring up. A lot of times you go there and you're fixated on getting a discount on the price. That's your only mission. You see a price and you go, I just want a deal. I want to offer $20,000, $25,000 under. It's going to change your payment by probably $50. You think because you're getting at this discount that you got a deal. Well, what if you could take that $25,000 and maybe pay off a car that's non-tax deductible, that's holding you from buying this home? We take that and we pay, you owe $4,000 or $5,000, we pay that off. What if you have a credit card that's at 26% interest? We pay that off. So you're gonna get a lot of people that'll tell you that you can't do this because of nonsense. It's just not, you're not being educated properly. So take these things, these credits, and you can utilize them in many different ways. You can get repairs, you can get your debt paid off, you can pay for your closing costs if you're coming out of pocket with less money. So there's multiple ways of utilizing this. So when you're looking for the home, look at what you can afford on the payment. Negotiate the payment, not the price.
Right.
Okay?
No, great point. A lot of good things that he touched on right there. And as you're trying to figure out what you qualify for, you want to know what your monthly payment is, typically PITI, that's principal, interest, taxes, and insurance, all in the payment. A lot of times when you're quoted, you're just quoted principal and interest. Taxes right now, it's 1.25%, right? That's a big impact on it. Insurance isn't cheap right now, right? So you want to know all those things early on. So if you get your offer accepted, insurance is one of the biggest things that we have certain, I work with farmers quite a bit, so I reach out to Desmond Sandlin, and if I open an escrow, I send him an address, and he tells me whether it's insurable or not, because there's condos and communities that are not insurable. They've dropped their master policy, right? So now you can't even finance unless you have 20% in. Well, if your agent isn't doing their due diligence up front, now you start spending money on out-of-pocket expenses ahead of time. So these are the things you want to look for and ask questions with your agent to make sure that you're doing everything up front, because if not, you're going to spend money and be frustrated if you find out 2 weeks from then that you can't even finance in that community. There's other things, FHA approved communities, VA approved community. Do we have any veterans in here? Anybody using VA? Well, thank you for your service. No. Yes, sir. So I'll share some things with VA as well as we go. Are you aware about the 10% disability with waiving the funding fee? Have you heard of that?
I don't think so.
Okay. So something to definitely take note of. If you have at least 10%, you can waive your VA funding fee, which is huge. That's what we did for our last client who just became a homeowner. VA funding fee is usually about 2.25% on the first time that you use it. So at a $500,000 purchase price, that's over $12,000. And normally people will tie that into their financing. You want to have that waived. You can have it waived if you have at least 10%. And as my dad spoke about earlier today at the Veterans Empowerment Workshop, as long as you submit your intent to file during escrow, even if you pay for it, you can get that reimbursed. So that's it. We can definitely talk afterwards. And did you mention April brought you, or who did you? April did. Yep. We'll chat a little bit more about it afterwards. And you're also looking VA as well, right? So another thing that we can chat about. Any other questions before I start jumping into it? We got a lot of good stuff to get into. So let's go ahead and switch to the next one. So biggest challenges for today, it's affordability. Okay, let's go ahead and go to the next. Do we have anybody who's going to sell to purchase in here? Or are they just looking, anybody who's doing that? So nobody's doing that? Okay, because that's got a whole nother situation on there, but we won't. Why am I so excited to teach the class? If you can tell, I'm a little bit excited. Some of it's the coffee. But it's because there's a lot of changes. So what changes are coming up right now? With what's been in the news in terms of the different changes that are going to happen with mortgages and other things. We talked about it a little bit. Some, yep. So has anybody heard of the 50-year loan? Okay, that's one thing. Okay. What else? What was it? Portable. I better speed this up for you, Brittany. Okay. Portable mortgages. Does everybody know what the portable mortgages is? So if you own a home and you have a certain interest rate, it's not passed yet, but they're talking about you can use say you have a $400,000 balance at a 3% rate, you can move that into your next property. This just was talked about this last week. So if that passes, what it's going to cause is buyers to flood into this. Right now we have a lot of pent-up demand with buyers that have been waiting and waiting and waiting, and you want to do this before everybody else starts doing it. Otherwise, you're not going to negotiate the kind of terms that we're negotiating right now. There's been a down period for sellers for about this last year. It has really softened up and corrected where you can get better opportunities. And we know it because just November of last year, if a home hit in Camarillo that was under $900,000, that was detached at 3 bedrooms, 4 bedrooms, in anywhere in Camarillo is at $875, guess where it ended up? $940, $930, and it was in decent shape. Everything around $850, $820 went quick, multiple, and went up, right? This was a year ago. Now, you have competition in the 8s. There's properties under $800 at $799, a little bit under. You have homes that have been sitting at $1 million that are dropping their price. You have homes that were sitting at $960, $975. They're down to $910, right? So we're seeing more of that now. We weren't seeing that before. So that's kind of the sweet spot in Camarillo in terms of for detached homes. And it is a high price point, but it creates different types of opportunities if you're looking at that price point. All right, next one, please. $50,000 in down payment assistance. So just real quick, so if you look down here at the bottom, and I have a few of these printed out, this is based on if it's a single person, they can make $137,000 a year. This isn't a low income. This is actually above moderate income of who can qualify for this program. Now the reality is these funds are going to be used up pretty quick. There's only 2 more left. There was $800,000 in total that the city of Camarillo approved. $700 has already been utilized. I helped a buyer about a month ago use $50,000. She was approved almost a year ago and was looking and looking and looking and finally found the property that worked out for her, right? And she closed on it. Well, when I spoke to the gentleman, he said that he's all one that is a pending application. They haven't found the house yet, but he thinks that one's going to be taken and there's one left. So if somebody is looking, you need to get your numbers running pretty quick to have the chance to do that. Once that's exhausted, the money's gone. The only time it frees up is when somebody refis or sells their property, then that $50,000 grant's going to become available again. Now, what the 50K is this isn't a grant like what VCCDC has, which is wish funds. And the wish funds is actually forgivable money that you can get about $30,000 in it. And after 5 years, as long as you live in it, it's all forgiven. That's your money. Okay? That's called wish funds. That's different. This is 3% annual interest, simple interest. So let's just use the amount $30,000. I guess $50,000. 30 is just the example I always gave. So it's $900 a year in simple interest. Okay? That would just tack on the back end of it. You could pay that off so you don't have any interest accruing, but that gave you $50,000. So if, let's just say Jeff was able to qualify you for a VA loan, FHA loan, conventional loan, and he says you're good for $400,000, then you can add this, as long as you qualify and meet these requirements and you haven't owned a home in the last 3 years, you intend to occupy this property, you're not buying it as a rental, you get to tack that $50K onto what he qualified you for. Does that sound pretty accurate? 100%. Okay. So on the high side, if you're a household size of 8, you can make up to $260,000. Okay. 4 is $196,000. And it's based on the area median income, and it's at 150% area median income. So 100% would be what the average is. It's another 50 on top of that. So that's why so many people can actually qualify. But who here, before I mentioned anything, has even heard of this in Camarillo? Okay, we had one person heard of it. Okay, that's awesome. Well, I'm glad we got one. The problem is the word's not getting out. Okay, so there's things that Jeff has access. He's a broker, been doing it for 35 years. He has access to all different types of programs. You'll hear a lot about down payment assistance, and I got to give both sides of it. On the downside, there's like equity share and all these things that people got excited. Oh, I won the lottery and I became chosen and now I got to use this. It was equity share. Equity share means that you have to share a percentage of the equity that you make with the state. That was a state program to give people down payment assistance, but you had to literally give 20 to 30% of the equity you make. So what we're talking about, there is no equity share. When you own that property, you benefit and get to make all the equity and become like that last sheet where it said in terms of earning 400,000+ in net worth, you can do that. If you buy a low-income property that has deed restrictions on it, guess what? When you sell it, you got to sell it to somebody else and they put a limit on how much money you can make. So don't get so excited about this. I'm just sharing it with you because somebody is going to take advantage of that $50,000 grant. I'm hoping it's somebody here in this class today, and if you have questions, we'll talk about it later. All right, let's go to the next one. Okay, 50-year loan, portable mortgage, no minimum credit. That's another new thing just passed as of, what's today's date? Is it 16th? 14th. So as of the 16th, no minimum credit score, right? That's already been passed by, is it Fannie Mae and Freddie Mac or just Fannie Mae?
Freddie hasn't taken it yet, but
Okay.
Fannie has.
So Fannie Mae's already eliminated the minimum credit score. Many people won't even start the process because they're worried about their minimum credit score. So that no longer will be a barrier now because they realize people have gone through a lot, especially over the last few years, and they don't want to eliminate it. They're starting to open it up, okay? No minimum credit score, I put Prop 13. The reason why I put Prop 13, does anybody know what Prop 13 is? Or Prop 60 or Prop 90? Are you familiar with that? Have you heard it? It's a transfer of your property taxes, right? Prop 19, sorry, Prop 19, it's a typo. I also did mine late last night too, okay? I have the same reason as my dad did on his typo, right? So Prop 19. So Prop 19 means that you can transfer your tax basis if you sell your property and buy another property. So if you owned a home for a long period of time, your property tax base is very low. Well, when you buy at your new higher value, say at $1 million, you're paying about $1,000 a month in property taxes. So it's $12,000 a year. If you can transfer your tax basis and all you pay is $3,000 a year versus $12,000 a year, that's a pretty huge incentive for somebody to take advantage and to be able to sell to buy their new property. Okay, huge advantage. Well, if this portable loan passes, you're going to have the same type of impact. And what's happening is people aren't moving because they got a low rate, so they want to free up some inventory. So again, these are the things that are likely to happen and that are going to happen. So that's why I'm excited about you guys being here today. Let's go to the next one.
There's also a stipulation, there's a time limit. If you sold your house, you only have so much time to find that new house to transfer the basis. So if you, so it's 2 years? No, I think it's less than 2 years.
Oh, it's 2 years.
2 years now? Okay.
2 years. All right, next one, please. Then versus now. We've talked quite a bit about that. Understanding the market. Okay, talk about bucket A, bucket B. More on the bucket B, right? These are properties. What you want is the worst home in the best neighborhood, okay? If you're looking for value, you want the worst home in the best neighborhood. Not everybody wants to deal with that, but that's where you're going to get the most negotiating ability. That's where you're going to get the best deal. So if you see popcorn ceilings, if you see a little small kitchen, I'm describing the house that we just wrote an offer on, right? Small kitchen, popcorn ceilings, right? Needed a new roof. Certain things came up. I've seen a lot of home inspections. In reality, I don't think it was that bad because I know it had good bones and it was a great location. Again, it's a neighborhood that homes are selling at 1,112, right? This home started at $1 million, went down to $965, was on the market for 40 days. My clients wrote an offer at $950, asked for 3% back in closing costs, right? Which is about $28,000. That's what they originally wrote at. They said no, they countered us at 2% closing costs, which was still good. It's $18,000. We said that money to us is very important because we got to do a lot of things with the house. So we went up kind of based on what Ken's advice was, because the payment only changes for every $5,000. Your payment usually changes about $30 a month in payment, okay? But for the seller, $5,000 is $5,000. It's a big difference. So we went up in price from the $950 to $959. It didn't change our payment much, changed it $60. But now we get the cash. So now we got the 3%. So we got that extra $9,000. And guess what the appraisal came back on the property? $980. So bought it at $960. In its current condition, appraised at $980, already moving into $20,000 in its current condition. What do you think is going to happen when the seller pays for the roof, to improve the roof, along with fixing the flooring, scraping the ceilings, paint and everything else, within the first month of moving in? Do you think it's going to be worth more or less than $980? Right? You can structure it where you can do those things in this market. We couldn't do that for the last 10 years. And I'm telling you, if you were able to get a home in central Camarillo, where I'm selling my property, it was like winning the lottery. This property is in the Heights, right? And those of us that know Camarillo know there's a higher ceiling in the Heights versus Central Camarillo. So I could have added on and spent $100,000 to build an ADU and do these other things, and I got a nice lot. I'm giving up a batting cage. I have a 3-year-old or a 6-year-old daughter that is very sad we're giving up our batting cage, right? But I think she'll get over it. We got a swimming pool at the new place, okay? So she's a fish. She likes to swim. I got to figure something out with the batting cage. It's still stressing me out. But it's the whole point of it is there's these opportunities there. Okay, so now looking at these charts in terms of understanding the Camarillo market, this is as of October 2025. When you look at this chart here, and your agent can pull this up, it's called Flex Market Summary Report. You look at days on market, okay? That's how long the average home in Camarillo is sitting on the market. Look at the trend right now. Going from July, August, September, October. Was as low as 40. We're at almost 65 days on the market. How do you think sellers are feeling right now on average?
Uncomfortable.
Very uncomfortable. Do you think they're willing to work with you? Most are, okay? That's the time that you want to do it. My best month last year was November and December. Usually people say there's no inventory on the market. There's inventory on the market, and you're going to see even more come January, February. So be out there looking now. If your price point is $900,000, look at homes that are at 1.1 and come down. Watch them. Just sit because they're overpriced. You're going to get a better value property in a better neighborhood at a better price because there are no other offers, and they're just sitting there waiting. So they're going to drop the price $50,000. You're going to see it all the time. You'll see these price reductions, right? Sold to list ratio versus the other way, you go at the lower price point at 8 and it's sitting, you're probably going to pay about at asking price unless it's the deal like what Sean's clients got where it was listed at $950 and went out at $1,125. That's a very rare situation though. This one sold to list ratio. What this means is at 100%, whatever the list price was, is what the properties went out. So in January of this year, it went out at 101%. So 1% over asking price is what the average was on the homes that sold. Now look, by August, it dropped down to under 96%, 4% off the purchase price. Remember I said the credit of what we're asking for? 3%, right? Get to October, went up a little bit in September, and then October it's back down to 97%, 3%, right? So where that list price is at, that's probably a good gauge. And I had a condo that I was selling, and the only homes that I've had that are sitting on the market over this last year, all the homes I've sold detached have sold most of them within the first week because we price them competitively and we know the sweet spot and we draw the action because it's priced very well. It's that bucket A property, right? Now I've had a bucket A condo that was bought 2 years ago at 720 in Ventura, 10-minute walking from the beach. This home, the last sale was a 3-bedroom, sold at $900,000. We priced ours, I'm thinking as long as we're under 8, we're going to be good. We priced it $775. You think it sold? Nope. No, not at all. I thought it would. And last year, the properties, when I listed them in that same community, 1 week, and we got 3 offers right away. So just a year ago, same exact community, almost pretty close in terms of price, it goes from a week to over 100 days on the market for this property. We drop it from $775 all the way down to $735, and we were in escrow at $745, and that buyer, the mom was buying it for the son, was like, nope, you're too close to the freeway, let's get out of this transaction. Killed it, right? Son was all about it, mom's like, nope. So now we're at $745. How do you think that conversation is with me and the seller now at this point? Thank God these are repeat clients that I've sold 4 or 5 different properties with. Otherwise, they'd be like, you suck. Like, you're the worst agent ever. It's the reality of the market, right? And I can't keep blaming the market. They're like, what do? We got to sell. We got to, what? I said, guess what? The only thing we can do is drop the price, right? So we had to get the price down. Eventually, it went at $725 is what it ultimately ended up going out. This is a great property that was fully furnished. Looked like an Airbnb beach property where homes are going for 1.1 that are similar properties to this, literally up the street that has a deck on top. This buyer who purchased this came up on that opportunity. These opportunities are out there, but you have to look at everything, and you got and you have to see what's out there and what's been sitting. So the DOM, days on market, is one of the most important things you look at. The other thing to be careful with, and this happens a lot, and we have to teach our buyers this, a home will hit the market, it's a bucket A property, it's priced well, it looks great. They see it on the first day, what do they want to do? They want to write. Do we want to do that? Depends. Depends, right? Sometimes you do, because you already know it's priced well, and you already know it's going out over asking price, and if they're already at their budget in terms of what they can afford, you got to strike right away. Try to see if you can put a short expiration on it and see if you get lucky that the other agent's like, yeah, let's, great offer, let's take it. But if they know they're priced well and they already have 10, 15 showing appointments set up and they did caravan and they had 20, 30 people come through and they already had people saying, hey, we got an offer on the way, and they know that, they're not going to take your offer. So the reason why I'm sharing this is their strategy of timing of when you write your offer, okay? When you show properties, I like to show property typically on Monday, Tuesday, Wednesday. Right? Why would anybody think I like to show property on Monday, Tuesday, Wednesday? What do you think? What would be an advantage to Monday, Tuesday, Wednesday showing, other than raining on Friday?
I'm the peanut gallery. So
Yeah, no, I know you know, Betty. No, you're not the peanut. I was just giving.
Less competition.
It could be less competition. They just went through the open house over the weekend. What are you thinking, Sean?
And then we can get an offer in before the next weekend's open houses.
Absolutely. So typically by Monday, Tuesday, Wednesday, it's after the open houses, right? And if no offers have come in yet, that seller is going to be a little bit more open to our offer versus the hope and the optimism they have when it just hits the first day on the market and we haven't done the open houses yet. We just did caravan and their hopes are they're going to end up here. So they're a little bit more humble come Monday, Tuesday, Wednesday after that weekend. Right? And if we do it early enough, we can put normally the offer is good for 3 days, expiration. We can put a 24-hour or 48-hour. I used to always do 24 hours. A lot of agents don't care for me for that, right? Because I always put the short expiration. They're like, really? You're giving me 6 hours? I've done it. But it all depends on what the situation is. But now I'm doing more 48 hours because I know that nobody else is going to write, especially if it's been on the market for 40 days. So I can give them 2 days. I'm still not going to give them 3 days, but I'll give them 2 days to let them, and usually I'm getting a response by the next day without having to put that hammer on them, right? It's a little bit nicer approach. Listing prices. Look at the sweet spot in Camarillo. Like I said, active is the blue. Went up to over 950, 975. Right now we're hovering right around 900, dropping to about 875 is for active median list price. New median list price is the red, dipped and went up, and then sold. Went way down in August and then back up to about right under 900,000. Telling you, that's the sweet spot in Camarillo for detached homes. Okay, this is all inventory. So this is taking into account the $4 million, the $12 million properties, as well as the lowest mobile home, condo, all that averaged out. You're hovering right around the 900. That's where your affordability is at right now. Okay, all right, next slide, please. Understanding the market, so the absorption rate, I referred to that. That's 2.58 months inventory. What that means is that if no new homes came on the market today, it would take 2.5 months to sell all the current inventory that's on the market, okay? And like I said before, 4 to 6 months is a neutral market. More than 6 months is a buyer's market. 2.58 is still technically a seller's market. But in a seller's market, how did I just get a $50,000 credit? Because it's like a seller's market with a twist, right? More towards the neutral, more towards that. So you have much more negotiating power. If you look at last year, it was at 236. That's a 10% increase. For the year, you're at 2.7, getting closer to that 3 months inventory. Again, before we were seeing that at 0.6 months inventory. It was less than 1. So we're at a much higher increase. The other ones I like to look at more than the average active's at 119. The median list is at 874. I like the median numbers because the median tells me that it's right in the middle. There's just as many before it and just as many after it. So to me, these median numbers tell me a truer picture. And if you look, that's 874. That's down from 897, down 3% from last year. That median price has dropped. That's the list price. So active means it's not sold yet, right? It's active. It's the list price. Pending or sold means it's closed. So now we have average sales price sold is at $1,083,000. That's up 7% from last year. So guess who the people who are buying right now? Guess who's buying? on the average being up that high? More affluent. People who aren't worried about interest rates. But why are they buying? If this is such a crappy market, why are they buying homes right now and spending over $1 million in increase in their tax? Why?
Because when everyone else is having a hard time, that is the time where wealthy people make more money.
And continue to grow. That's why the average net worth is over $400,000 for homeowners versus everybody else. That gap keeps growing. The people making money aren't worried about the interest rates. They're making moves, right? Then you look down here, median sales price, $887.50. So that's down 0.3, less than, not even a 0.5%. So last year was at $895. Would you say it's probably stabilized pretty good over the last year? It has. This is about as low and as good as you're gonna see. It ain't getting any worse. I hate to say it. It's not, unless we see something crazy and these rates spike up and there's some major catastrophe, but we've gone through COVID. We've gone through all the crazy changes to end up to where we're at right now. People said, oh yeah, the cycle has already happened. We've already seen the bottom and we're not gonna see it any further lower than where it's at. And if you look at the real estate market for the last 100 years, this is what you see. And if you see the trend, it's a 3% appreciation average over the last 100 years. So even if there's dips, right, the highs are always higher than the last high. Meaning, if a home right now sold at $900,000 and the market dips, as long as you can ride it out for more than 10 years, and when it comes back up, it's going to be higher than whatever the last peak was here. The lows are never as low as the last low. So meaning, for that same home, if before those homes were at $400,000 and the market crashed, you won't see it that low again. You're going to see it probably around $600,000, $700,000 if we go through that correction. But there are no signs that show any of that happening. And if anything, I mean, you know, just from a mortgage standpoint, everybody's been waiting for the rates to drop, waiting for it to drop. Where's it hovered? Hovered roughly about 6.5 to 7%.
Yeah.
So under 7 is good because it stayed over 7 for a good period of time.
It went up close to 8.
So it was at almost 8%. Most people don't realize the rates were at almost 8% and people were still buying and selling. They were still making moves. So at the peak of the market during COVID, when we saw the spike, 7 million transactions. After that, when the rate stayed up, guess what that next year was? Less than 4 million, almost cut in half with the amount of transactions. We've been hovering around 3.9 to 4 for the last few years. What do you think's coming next? You think it's going to go lower? No, it's shooting back up. And you know, it's tough talking about, you never know politically where things are at, but with the current president that we have in place, his background's real estate. That's something I feel confident working in the real estate industry, that there's going to be certain changes that take place, even if the rates don't come down significantly, like people are saying, oh, I'll just wait until they get down to 3-4% again. I don't think that's going to happen. Personally, I'm not holding my breath for it, even though I just did what we talked about and I'm expecting it to get down. But if it gets down to 5, I'm gold. Then I'm going to refi my property, drop my payment down significantly, and now structure it for the 30 years. Some people will say the 50-year loan is crazy. When the market crashed before, 2008, did anybody hear of what are called loan modifications? Okay, loan mod saved a lot of houses, including myself, because we bought in 2004 when people were doing adjustables. I thought I was conservative with a 2-year fixed interest only. I thought that was conservative, right? Then I refied it, and my original payment was $2,300, $2,400 for about a $415 purchase, no HOA. Then, and I put 60 down of cash, 60 down to get that. Then I refied it on a 10-year fixed interest only, thinking I'm super conservative with 10-year fixed interest. At least I didn't have the adjustable. My payment went from 22-ish, 23, up to $3,000 a month off that refi, doing a 10-year fixed interest only. Market crashes. Some people are on adjustables, and their payment went from $3,000 to $5,000 a month, like within the next couple months. Right? That's literally what happened. They're like, we can't handle $5,000 a month. Not at that time. We can't handle $5,000. They walked away. So when they did the loan modifications, for those that were able to qualify, and I'm grateful that we were able to because I kept making every single payment, right? Now when they restructured it, they looked at what my current pay was. Well, I wasn't working in real estate at that time. I actually took an accounts payable job. I was making $12 an hour, quite a bit less than what I was making in real estate before that, right? So they restructured my loan to about a third of what it was. So now our payment went to $1,500 a month. They put it on a 40-year loan, not a 30-year loan, stretched it to a 40-year loan. What's it sound like? The 50-year loan, right? People aren't they're not, I don't know very many people that plan on paying their payments for 30 years to pay off their property. That's just the reality of what it is. That's why when people argue, oh, the banks are making all the money and this is bad for the borrower, what it does is if it can bring your payment instead of looking at $6,000 a month and get you closer to that $55,000 or $5,000 a month, do you think more buyers are going to come into the market? 100%. That $1,000 a month is huge. And then eventually you could refi if the rates come down some and put it on a 30-year, right? So it's going to create other opportunities. So very important to understand. Days on market's important to know the average days on market. 64 days is the average, 34 is the median. If I'm speaking to a seller on the listing side, the number I want them to focus on is 34 days, right? The reason why I want them to focus on that is if we haven't sold the home in the first 34 days, we're hitting that 60-day average. 60 days is what a majority of the people are dealing with. The people who actually sell their home are selling it in the first 30 days. And I would argue even further, the ones that are really selling their property and doing well, and it's not like 40, 50,000 over asking. It's very common, and these are important notes to know as a buyer, that many homes are going at asking price, maybe 10 over, maybe 15, 20 over. It's a much soft, you don't have to be as aggressive as you had to be in the past. Now rely on your agent, but I'm telling you, overseeing many different transactions and writing many different offers, we're writing it at asking, sometimes a little bit under. Now I'm not coming in 5% under, and that's actually the one who wrote on my beach side, the Ventura property townhome. They wrote 5% under. How do you think my seller thought of me then, right? We were at 735. They wrote 700,000 as their offer. Guess what we did? Countered back at their number at 725. And the buyer said, okay, we'll take it. Because they knew it was a deal at 725 still. They were just trying. So we can't take that personally as sellers and listing agents. We got to understand buyers are just trying to negotiate. You want to be careful with coming 5% under though. Okay? That 3% is a much safer area. And again, for me, the cash is more important than saving 3% off the price. Okay? Just points I wanted to point out there. So does this all make sense? The numbers are usually the most boring part of this whole presentation. So let's skip forward. Okay, these are just some of the people we helped out. This is actually the one that Sean listed here, and he did a great job, had it in escrow within 3 days. So great job, Sean, on that one. And that one was listed, this was in Moore Park. What did we list it at, 850?
850, went out at 865 with the lease back.
Yep, but as a sale, no credits, no repairs, but there were 3 offers in 1 weekend on that. He had 20 plus on each day in the open houses. He priced it, just so you know, the last comp for that property was at $890. And they priced it super aggressive because they were one of the 14 on the other side competing with strong offers that were non-contingent. So we had to prove that we could sell this home really quick. Otherwise, he would have listed it at $890. But instead, because he was very motivated, went $850 and got $865. So like I said, 15 to 20 higher. That means you had 40 people at the open house over that weekend to get 15 higher than asking price. The old market, you had that many people, you had 10 offers, you were 50 to 100,000 over asking price. That's the difference. Those people who bought then at that time, and it's no offense if you did, but many people aren't happy with what they got and they overpaid for those properties. And the market has not increased over the last 2 years if they bought 2 years ago and wrote 100 over asking. So the opportunity is much better now. All right, next one. We can do another. Well, actually, let me do this one again. Go back. So this property right here, over 3,000 square feet, bought 3 years ago, okay, or built, 3 years ago, just bought this recent year. 3,000, has a master downstairs, master upstairs. It's in Ventura County. Just guess the price, built 3 years ago, what that price was, if you just had to guess. And fully updated inside, beautiful views, inside, outside. What would you guess on the price on that home? 3,000 plus square feet, 3 years ago.
What city in Ventura County?
Good question. What would your guess be for Ventura County? And then I'll specify the city next.
3 years ago, maybe 125.
125. So that home went out at $875 in Fillmore, built 3 years ago. Incredible value. You can't, the same type of property out in Santa Clarita Valley, out towards Valencia, these homes are going over 1.2. And I know, because I know the builder who's worked on these and those properties. They were selling over 1.2, so that's still local, 875. All right, let's go ahead and switch. All right, the home buying process. So 8 essential steps, go ahead and switch. We're going to get into it. So finding the right real estate agent, we talked about a bunch of it. If you want to look them up, check them out on dre.ca.gov. Google them. You can check out their Zillow past sales. These are all ways that you can research them. Okay. Ideal real estate agent should have up-to-date market knowledge. My recommendation, not only be strong with the market, but be a strong communicator. Ask a lot of great questions and listen to you, right? And you want to make sure that they're hearing what it is that you're trying to share with them. I would be open to what's out there, because a lot of times what I've learned working with buyers is they have a vision of a white picket fence, certain size yard, certain size house. And what we find out that most buyers end up buying is the best deal on the market at the time that they're qualified, right? So we don't want to put too many barriers there. See as much as you can. The one thing I will tell you, and this isn't, it's just to be aware of it. If you're dealing with an HOA, condo, townhouse, do your research, okay? Make sure you do your research. Make sure it's a good community. There are some good ones, but a lot of them are sitting on the market, okay? And there's a reason. Now, on the positive side, you can get a great deal on a condo or a townhouse. But you have to understand that some of these HOAs are increasing, so you want to try to look at the history of that, right? And see what that looks like and keep that in your budget, all right? Let's go to the next. We talked about the buyer rep agreement. Commission. Who knows who pays for the buyer's commission? The buyer pays the commission. Well, that's what everybody believes after the NAR settlement. So the way the NAR settlement, when that was passed, they wanted to separate where the seller pays the listing agent commission and the buyer pays the buyer's agent commission directly, right? So their commission would be covered from the buyer, whatever was negotiated between that buyer and the agent, they would be responsible for. Now, there are a few situations, I don't think Jesse's still here, but just I know he's worked with a cash buyer that actually did that. In my experience with the transactions I've closed since then, in every single one of those transactions, and you can talk to an escrow officer who does a lot of transactions, or a loan officer who processes a lot, how many have you seen paid for by the buyer?
Very few.
Very few. So you have seen some,
A couple.
but very few. Every single one of my transactions, the seller has paid the buyer's commission. So what happens is in the offer, the box gets checked off, okay? So don't be afraid to sign a buyer rep agreement with an agent that you trust. Just speak with them about it and ask them, okay, so we agree on X commission, whatever that amount is. We'll say $25 just for fun, right? So we agree on a $25 commission. If the seller's only willing to pay $20 commission, then who pays that extra $5? The way the buyer rep agreement's written up, depending on what boxes are checked, the buyer's responsible for that difference. Now, an agent can go down in commission, but they can't go up, right? So the difference in this market versus before NAR was before the MLS advertised what a buyer's agent would make on that property. Now they feel there's steering involved, so that was part of where this came out. Now that can't be advertised. So there's no commission advertised on the MLS, so an agent just shows the property. They can ask if they're cooperating. I don't even ask. I just show the properties, and I know many agents don't ask. We show it. If the buyer's interested, we write. We check a box that the seller's going to be paying for whatever's agreed upon, the $25 or whatever that amount is, right? And the seller's the one who covers it. Now in reality, just this is being completely transparent. Part of what was being misled is agents were saying that they were representing their clients for free, right? That there was no charge to them. It's in the purchase price, right? If we agree to $25 and seller's paying it, it does affect their net. There is something there. But what I can tell you, especially in this market, you get a good agent to represent you, you're going to save a heck of a lot more money having an agent who represents you, who is getting paid their, whatever their $25 agreement is, or whatever it says on that buyer rep agreement. They're going to negotiate for you and save you a heck of a lot more than if you go, likely, you go directly to the listing agent and try to work something out with them. Just remember, if I'm hired by a seller, if you're the seller and you hire me to sell your home, what's my job to do for you? What's my goal? If you're the seller and you hire me to represent you, what do you want me to do?
The best deal for me.
Best deal, make you every penny that I can, right?
Yeah.
Negotiate the best terms for you, make you every single dollar that I can make you. So how do I do that and represent a buyer at the same time? And then guess what my job is? If Betty's the buyer, perfect name for a buyer, Betty the buyer, right? If you're the buyer and you hire me, you come directly to me and I'm representing the seller here, right? What's my job for you?
I want to get the best deal as well.
So how do I do that? It's very challenging. You can do it, and there are good agents who can, but now it's more of a facilitative approach, meaning there has to be a high level of trust and confidence that I'm not just trying to get paid twice, $25 here and $25 over here. I can make $50 on one transaction, right? And I have to make sure I look out for your fiduciary duty, your financial best interest, as well as yours. So I would do something to the effect of, I'd say, do I have permission to share with the buyer that this is how you want to respond? And you would have to feel confident that I'm not sharing any information that could hurt you in terms of negotiating. It's very challenging to do. So something to be careful with, and it's not necessary in this market. Bless you. We were seeing quite a bit of that happening in a more competitive market where there was less inventory because it was 1 out of 14 or 1 out of 20, but Sean got an offer accepted and there were 14 offers. And it wasn't the same agent. And any seasoned agent who's been doing this for a long time is very happy to have a buyer on the other side and a seller on one side. Why? Why is that a happy situation? Well, you can't ever guarantee that, right? But it does help. It helps create where you have fiduciary duties and everybody had their own representation. It keeps it very clean, very easy, and everybody has their own representation. So something very important, don't be fearful in terms of getting a buyer's agent. If anything, I strongly recommend it, and that's why this change was made, was to try to make sure we're all being honest about our conversations with how agents are getting paid and a buyer has say in it. And it's all negotiable. Everything's negotiable, okay? Any questions on that before we move on? We good? Okay. So the two things, find a loan officer you can trust. Hint, hint, this guy's not too bad over here. He's decent if you need to talk to somebody. Find out what you qualify for, monthly PITI, and your total cash to close. Those are your two numbers. Total cash to close is your down payment as well as closing costs, okay? Closing costs can vary based on purchase price amount of what you're looking at. But a lot of times, depending on what you're looking at, if you're looking at around $900,000, you're probably around what, 18K?
Yeah, there's two parts.
Okay, go ahead.
So you have your escrow, title, appraisal, that's one part.
Yep.
And the other part is interest, taxes, insurance, what they call prepaids.
Okay.
So somewhere probably, 14,000 for the prepaids.
Yep.
Insurance, taxes, and the difference,
Is for the loan.
maybe 6,000, 7,000 for the loan costs.
Okay, so still ballpark, you're at almost 20,000 at a $900,000 purchase price. That's just closing cost. So that's not even talking about the money you're putting down. So doesn't it sound amazing to be able to get the seller to pay that closing cost? Seller's paying your agent's commission, seller, or we got to call concession. Seller's also paying for your closing costs and sometimes even repairs on top of that. You can do that right now, okay? Not in every situation, rely on your agent for it, but those opportunities there. Credit score, basically the lenders are looking at your risk, right? How credit worthy are you? But we already said that requirement is going to be out for certain programs. So don't let that be the barrier. The other best advice I can give you is get a professional to help you with your credit. So I did work with Jeff. I trust him, like him a lot, and that's why I asked him to be here. Worked with a lot of different loan officers in 21 years. Well, I can't say I've worked with a lot. I'm actually kind of a snob when it comes to working with loan officers. I'm very particular, and you probably have friends who, don't care for me too much because I've never given them an opportunity.
I've never heard that.
Yeah? No? Okay. Well, that's good. Well, thank you. But see, I pay them good money to do that. It just took a sandwich and some chips and a cookie. Yep, that's all it took. But basically, you got to find somebody that you can trust, number one. Your agent and your loan officer are going to make that experience great or not, okay? So you want to find a good team that you can. A lot of agents will tell you talk to 2, 3 different loan officers. I'm being recorded right now, so I won't say too much more of that. But what I've learned is I work with people that I know can get it done. I want to guarantee I'm going to get a home. I want to guarantee that the terms are going to be what this person told me they're going to be, and that's what it is at the end of the day. Now, there's certain laws and regulations in place. It's called TRID and other things after the market crash to clean up really a lot of the mess that was there. And you've been in the industry over 30 years. You're not in the industry that long if you don't have a strong reputation and lead by integrity. So that's something very important. You got to be good and you got to be trustworthy. Okay, let's go to the next one. How much you can actually spend, does a home fit your needs? Those are the two things as a buyer. But what we're going to do is we're going to jump into, because I want to get this wrapped up into any big questions. And we're going to pretend like, if you don't mind, do you want to be my seller or buyer? Do you want to be either of them? No. Not really? Does anybody want to be my seller or buyer? Who wants to be my seller right now? You be my seller? Thank you, Brittany. Describe your beautiful home that you're selling right now.
Okay, it is
Betty, are you going to be my buyer, please? Betty the buyer? Okay. All right, what do you got, Betty? Or Brittany? Uh-huh.
It is beautifully renovated with scraped ceilings, a new roof, it has AC, it's perfect.
Wow. And what's your home priced at?
Let's say
$975. That's great. And Miss Buyer, what do you want to offer? This home hit the market. It's been on the market, we'll say, for 7 days. And you can ask me any questions you want. So it's been on the market for 7 days. What do you want to write on that $975 list price?
Well, how many other houses did we see? Can you refresh my memory?
We've seen all of them. Like 50 homes. We've seen like 50 homes, and you love this house.
I love this house.
You love the house,
okay.
And you're also a buyer, but you're also buying for yourself. You're an agent, and you're a savvy agent the way that you are. So what questions would you ask? I'm the seller's agent, the listing agent. What questions would you ask me as a buyer's agent? These are things very important to pick up on. So what questions would you ask me as the agent? Been on the market for 7 days, listed at $975. You know you love the house and you want to buy it for yourself.
How many showings have they had?
Okay. We'll say we've had 10 showings over the last 7 days.
Okay. And how does it compare to the comps in the area?
It's priced very well. The last high comp sold at $1,050,000 a year ago. Recently, one sold at $1,020,000. Very similar.
Okay.
And we're at $975.
Well, what if we did a full price with closing costs of $15,000?
You want the seller to pay for the $15,000 towards closing? Is that how you're going to write it?
Yeah.
Okay.
Yeah. And then, of course, my buyer's agent compensation.
Okay. So, and what's that going to be?
2.5%.
$25?
Yeah, $25.
Okay, $25. Wonderful. All right. So, did you hear the offer, Brittany?
I did.
Okay. And how would you like to respond to that? Or do you have any questions for your listing agent over here?
Has anybody else called, or is it slowing down?
We've had 10 showings.
Nothing else in writing.
So what would you ask? And she's also a savvy listing agent as well. So we're working together as a collaboration of you selling your home. What other questions would you have? She put a 1 hour or 1 hour, 1 day expiration. 1 hour. You got 1 hour. Take it or leave it. Hey, don't tell anybody. Yep. So 1 day expiration. What else would you ask?
I don't know. It's a pretty good offer.
Yeah. So $975, $13K. What would you ask?
I would ask what kind of loan there is, how much down payment and deposit there is.
Those are great questions. What kind of loan do you have, Betty?
I have a conventional.
Okay.
Conventional, 20% down.
20% down?
Mm-hmm.
Great. So she's got 20% down. It's a conventional loan. Do you all know the difference between conventional, VA, FHA in terms of the loans and the differences? Which ones do you think is the strongest out of the three? Could depend, right? Could be depend. I heard VA. VA is a very strong offer. There are a lot of agents who believe, though, VA and FHA are riskier loans because they have higher what's called debt-to-income ratios, as well as it could be 100% financing. But if it's VA with 20% down, go ahead.
I would ask Who's doing your loan?
And that's a very important question. So you want to know who's doing the loan, right? And then things that I ask for is called a DU approval or an LP approval. And what that means is it's been submitted to an underwriter. It's not just a pre-qual or pre-approval. These are the things that are done that show another agent how well versed and how much you're vetting that buyer. Now, if we make it too complicated, we could scare the buyer away, right? We don't want to scare Betty away. It's a great offer, great price. She's got 20% down, right? She's writing a 975. If I've already bought another home, that's another important, where are you moving to next, right? And if she's already in escrow on another property, I'm probably going to look at that offer pretty hard. And as her listing agent, I'm going to say, you could counter the closing costs. But before I did that, you know what I would do? I'd call the buyer's agent. I'd call Miss Betty and say, is the closing cost necessary for you? Or, is it price that's more important for you? How do you feel about that? Would you be willing to go to a lower price, or do you need the closing cost?
Well, I'd like to keep some extra cash on hand so
Okay.
I can do some of my own updates.
Wonderful. So if we say yes, and this is what I would do as a listing agent, if we say yes to the $13,000 in closing costs, would you be okay with that being it? Or we limit so that I'm not spending more once you do inspections after the fact? Would that be something that you're open to, Betty?
I would, as long as the repairs are not over $1,000.
Okay. So if there's something that comes up with repairs over 1,000, if it's less than 1,000, then you won't ask for anything else.
Right.
If it's more than 1,000, then you'd want another opportunity to negotiate.
Yeah, just in case there's a big issue.
Great. So by asking that question, I got a lot of information there. I already know what could happen if something gets discovered in the transaction. Now, Betty's done a great job of being honest and forthright so that she's not committing and saying, nope, I'm only taking it at $13,000. Because if something's discovered that hasn't been discovered yet, then she doesn't want to shoot herself in the foot and lose that opportunity. Go ahead.
I do have a question.
Yes.
Did the seller get a termite inspection?
Yep.
They did?
Mm-hmm. And
are
free
they-
and clear.
It's free and clear?
Yep.
Perfect, okay.
Free and clear on the termite, and they actually did their own home inspection as well, and it's super clean.
Perfect.
They upgraded this home, it's clean, so we don't anticipate any major repairs,
Okay.
but we're good with that.
And
Now, go ahead.
Would they be willing to offer up the pre-listing inspections?
Absolutely.
And then I can give you an answer on
One-
whether I'm going to ask for anything else.
100%. So in our counter that we send to you, we will also send over disclosures and home inspection and termite report. And we did a sewer lateral that was also clean, right? And the roof was done 5 years ago.
Excellent.
'Kay.
Sounds like a done deal.
Wonderful. Okay. So what we're doing is we're having a lot of conversation before our counter is going back and forth. We're also doing a lot of conversation before we even submit the offer, right? Because the last thing we want to do is offend somebody or waste their time. But we're still negotiating and advocating. And based on the answers of what I get when I ask the questions, I already know, okay, we're good, this will be simple, everything's going to be good. Or, you know what, they're writing a great offer. We're already agreeing to $13,000. They may ask for another 20 to 30 on top of that, right? If we can get past all that and negotiate as much up front, it's going to be a lot smoother situation versus surprises of $10,000, $15,000, $20,000, $40,000 while we're in escrow. So when I negotiated mine, it was already in escrow with another buyer, right? And we already knew what was there through the reports and everything else. And I also already knew what the seller agreed to with the buyer. Now the buyer was already out, like they were ready to go. So I made one offer just to see if they were willing to do it. And I had a feeling that they would be agreeable to it, and they were. So we wrote it, submitted the offer, got a little bit more credit, but I also didn't ask for the farm, right? I kept it within reason because otherwise that seller would be better off just dropping the price. Okay? How are we doing on time, Leslie? 6:35. We started at 5, so we're already hitting the 90 minutes, right? All right, so let's skip to the next line. Yep, we're going to jump to. So we came to an agreement. We accept the offer. We took it at $975. We're given the $13,000 in closing costs. Okay. So what is an EMD for our buyers, not for our agents? What's an EMD? What's an earnest money deposit? You guys remember what the EMD is? Do you know what an EMD is, earnest money deposit? When you write the offer for $975, you're that buyer. Typically EMD is 3%. So at almost $1 million, that's almost $30,000 that's an earnest money deposit, okay? So we'll just put 30K EMD. Now the important thing to understand, 3% is customary, especially in a multiple offer situation. You probably got to go higher to that. That money, you have 3 days, 3 business days. If today's Friday, 3 business days would be Monday, Tuesday, Wednesday to submit that money over. This money here is negotiable, okay? When I actually wrote on my own property, I negotiated it to $10,000. So I wrote 10K on it because I knew I wasn't competing with anybody else, and I wanted to make sure that I could put that money in an escrow account and still pay my bills, all right? So I didn't put the full 30, I put 10K on my own transaction. That 10K went into escrow, which is a neutral third party. You're gonna hear escrow multiple times. Escrow means neutral third party. You have an escrow officer. They work with the buyer side, they work with the seller side, they work with title, they work with the loan officer and the lender. They're the octopus that works with everybody. Escrow is a neutral, safe space that money goes into escrow, not directly to the seller, okay? So we have 3 business days to get that over. Very simple. Seller's duty is to do what? What is the seller, their biggest duty to do in a transaction? Guess what it is? Disclose. Buyer's duty is to do what? Yep, ask, investigate, okay? So we have, after an offer is accepted, roughly how many days to know if this is the home and potentially put that EMD at risk? What would you guess? How many days? How many? 3 days? Nope, more than that. 7 for seller disclosures, 3 for the buyer EMD, okay? 17 days is what we typically have unless it's been reduced. So almost 3 weeks, more than 2 weeks later, do you still have before you put this EMD at risk, okay? And in 21 years, knock on wood, never lost a dollar for any clients because we know how the contract works and how you're protected by the contract and how you can get out of it without jeopardizing that EMD. There's something called a contingency. Who knows what a contingency is? Buyers. Who knows what a contingency is? It's a very important term. It's a good faith excuse out of the contract, okay? So you have multiple contingencies. Guess what your contingencies, what would be a good faith excuse out of a contract? She brought up if there were repairs over 1,000, right? We would do what's called a home inspection. Home inspection is going to be done in the first week. Home inspection costs usually $500 to $600 for that home inspection. All right, that's your general home inspection. Once the offer is accepted, if I can by Monday I'm scheduling that home inspection. That's going to be my general inspection. I'll probably do a termite, so that's $500, $600. Termite, $75.
Not if the seller did it.
I know. Well, I don't trust the seller, so we did it as well, right? So, but you could, but she's right. On this one, it was already clear. But in most situations, I'm going to pay $75 for a termite inspection. Now, what I would highly recommend, it's called a sewer lateral inspection. That's a camera inspection that goes from the waistline. If they have a clean out, it goes out to the main street line. It's required in Ventura for detached homes. It's not required in Camarillo, but I do it almost every single Camarillo transaction now, and Ventura County. You're probably looking, you can get it between $250 to $350, depending on who you hire to do it. But that's, I'd say $250 is a fair estimate for a sewer lateral inspection. All right? Now, there could be more, and I don't want to concern you, but the first one we do is that home inspection. Termite typically are the 2 that I'll book first day. Now, if I do it up front, I got 17 days to negotiate repairs, right? So if I did that up front and I discover we got an electrical issue or a plumbing issue, then I can now do the sewer lateral inspection, or now I can get the electrician to check out the panel and give me an estimate. Once I have all these reports, I'm going to do what's called a request for repairs. It's not required, it's optional, but I'm going to do that 90+% of the time. I'm sending a request for repairs along with the inspection reports. Guess what seller has to do if we fall out of escrow once they have those reports? They have to disclose it to future buyers. So if they already have to disclose it and a major thing came up, like she mentioned, like say now we figured out the HVAC doesn't work. That's the furnace, the heating and AC and it's a $15,000 fix, right? Now, we might as well figure it out with this buyer, because we're gonna have to now try to advertise it that it fell out on the market because a $15,000 repair came up. What do you think the next buyer is gonna want? The $15,000 repair done. So you might as well try to fix it with the first person. And in this market, with good agents, and it's not to blame or say there's good or bad agents, but good communication, we can work through these things. In a perfect situation, you got a good buyer's agent, you got a good listing agent, they're communicating with each other, everybody's trying to work together for a successful close. Protect everybody in the process, right? And make sure that the buyer gets a home that they feel good about, and the seller feels good that they sold it to a good buyer, and the process was as fair as possible, right? It's not about trying to take advantage because you smell blood in the water, so to speak. And we've had a lot of that because buyers have paid so much for properties, bidding and doing all this. The second it changed, they just kind of went for the jugular. Well, it's kind of balanced out a little bit. And I mean that because we saw some crazy stuff happening when the market was shifting around like 2018, okay? So out of pocket, home inspection, termite, right? Sewer lateral, if you need to do a roof inspection, if you have to do a mold inspection because water came up. I'm doing one on Monday. That's $450 for a mold inspection, right? There was a water leak that was disclosed from 7 months ago. We're gonna poke a hole through the ceiling because it's a bathtub up top. They're gonna test it, do an air sample test, and then fill that hole, and it's $450 for that mold inspection. So important thing to check out because that could be a $10,000 situation down the road, okay? So now we have 17 days for full contingencies, and what we want to hear on the loan side is called a final clear to close. And I did jump ahead just a little bit. There's one other thing that happens that's one of your contingencies, one of your good faith excuses out. What also has to happen? Buyer and seller agreed at $975. In most situations, and this one with 20% down, a lot of times the appraisal can be waived because they got enough money down. And like I said, the comps were higher than what this home sold at, right? So a desktop underwriter, after submitting it, and I can ask Jeff and say, Jeff, before we write the offer, do you mind running a DU approval or an LP approval? The VA would be LP, right? Is it LP for VA? DU still? Fannie, I'm sorry. You're right. Okay, Fannie and Freddie. So basically, we would submit a full file or a pretty complete file, and he would check based on the address and my qualifications as a buyer with 20% down, whether there's an appraisal waiver. If it's waived, we don't even have to worry about it. And it looks better when I write an offer and I say, the $975, you don't need to worry about the appraisal because the seller's worried it's going to appraise. Because let's say we do an appraisal and the appraisal comes back at $960 and I only have 3% down or 3.5% or 0% down. What happens then? The appraisal comes back and the appraiser, which costs me $600 ballpark, right, works for me, the buyer. What happens if that appraisal comes in at $960? What would you think? And we agreed at $975. What do you think our options are at that point?
Then you can go down.
In price? We can ask him. We can send the seller a copy of the report and say, hey, it appraised at $960. Will you drop the price to $960? What could that seller say? Could say no, come up with the difference. They can say kick rocks, right? In this market, do you think they're probably going to work with you a little bit more?
Yes.
Absolutely, right? The old market, a year ago, do you think they're going to work with you? No. No, come up with the difference, buddy, or the 14, 15 other offers behind you are going to take it. They had a lot more leverage, a lot more power. They don't have that right now. So you have that appraisal protection, and that's what the bank is willing to put an appraised value on the property. Does that make sense? So it's another protection comes in place, another opportunity to negotiate. You don't really fully need to know till after 2 weeks after getting your offer accepted. The reason why this class is so important to understand kind of the rules of the game ahead of time is now you know when you go out and you see a property that seems like a really good opportunity, your job as a buyer and working with a good buyer's agent is to secure that property for them to say yes to your offer and your terms and be locked in. Because on a standard transaction, the second that happens, and let's just say you got that deal, $975, $13K back in closing costs, so really you got it $13 under value, which really put it at about $962, right? Which isn't far off from that $960 appraised value, but you know, we'll talk about that differently. If another offer came in at $1 million all cash, but they already accepted our offer with the $13,000 closing costs, what do we do? What can the seller do at that point? What do you think? So they already accepted our offer because we timed it right. We wrote the offer. We got the seller on the right day, and they said yes. But a day later, somebody sees the home, and they're like, I want to put $1 million all cash on this property. What do you think that seller can do?
Deny your offer and take the other one?
That's what people are worried about. What do you think?
Nothing.
You said nothing. What do you mean by nothing? They're stuck with
Obligated to sell it to you.
to the first one.
Price.
So the contract is built more so for the protection of the buyer than for the seller. And so your answer is correct. They can take it as a backup offer, right? But they have to sell it to the person who secured the offer first. That's the important thing to understand. And remember, you got more than 2 weeks after to do your full due diligence. And the most you're risking is your out-of-pocket expenses. And in a lot of situations, sometimes the home's already fallen out of escrow and the home inspection's already been done by the previous buyer. So now you're not paying anything out of pocket, and you're still able to do your due diligence and see if you discover anything else. And if everything's good, you move forward. So you can save money there. Yes, sir.
What if the appraisal comes in for more than the $975?
Great question.
Does the seller have the possibility of saying, I want you to pay more?
Beautiful question. What's the answer to that one? Nope. They don't see it. The buyer pays for it. So I'm not going to send it to the seller, right, if I show a higher appraised value, unless they ask for it, and I still don't have to give it to them at that point, right? We own it. It's actually the lender. Who owns the appraisal? Who owns? So is it the lender technically owns it, but the buyer's paid for it, so you have a copy of it, and you do not need to send it to the other side. The only time you're going to send it is if it's lower, and we're trying to renegotiate. If it's higher, our response as agents is what?
You have built-in equity.
No, well, to our client, but to the seller, if they ask, or the listing agent, what do you respond to the listing agent?
It came in at asking.
Beautiful. It came in at value. That's all. That's always our response. It came in at value. Yes. Yes, sir.
Just say for some reason, like I guess it's a good question, because what if they do find out? Could they do anything, or they gotta just?
They're stuck.
Okay, they're stuck.
Yeah, they can't, but they're pissed off probably. And they're probably like, I'm not doing anything else, whether they're pissed off or not, but they're probably like, I'm not going to do any repairs or give you any credits, or you're already moving into $20,000 in equity, right? That's the reality of it. So it wouldn't be wise, it'd be smart if they asked to say it came in at value. Not that we ever want to misrepresent anything. We definitely don't teach that, right? But typically in most it's very actually rare that you'll see the value go higher. Appraisers typically don't put higher, even if it's there. They usually come in at value. So when you say that to another agent, they're probably checking like, yeah, right, it came in higher, But again, they can't force you to submit that appraisal over because you're not asking for anything. Okay, but great question, because it can go either way, right? It can go either way. So now we're to our 17 days. This is why the lender relationship is very important. What happens here is I need to hear a final clear to close. And what that means is all the conditions have been met, or I need to make sure Jeff feels good. So Jeff, in reality, on the one that I'm in escrow on, am I good with removing, yes, my loan contingency?
I'll talk to you about that later.
Oh, shoot. That's messed up, man. You got me freaking out over here now. It's that time. But that's what I want to hear. Yeah, I take everything back. Don't work with this guy over here. No.
It becomes either we're clear to close, or it becomes a decision where we have to make.
Are you doing 6-7 right now?
Yeah.
Okay.
No, it's sometimes we'll have to either sign it off or try to get an extension, right? So we sit there and go, okay, the investor's asking for these items. What are the chances we're going to be able to come up with these items and satisfy everything?
Okay.
So if it's really good and slam dunk, yeah, we just go ahead and say, yeah, go ahead and sign off contingencies. If it looks like we could have some issues, then what we'll try to do is we'll get an extension.
So what I've seen, and thank you for sharing that, what I've seen happen when people have either chased internet rates and worked with somebody who's processing, and you'll hear this a lot from my dad who's retired Navy, he'll say they're brainwashed to use Navy Fed. He swears against that, right? Because you're dealing with a processor. Somebody will originally start with it, they hand it to somebody else. So the initial person you're speaking to, all these different things, but basically we lose control over the situation. Now I'm praying and hoping I get through to somebody at, let's just say a bank, in general and praying and hoping they can tell me, and I've never worked with them before. They know that they'll probably never work with me again. They're not going to say, yeah, remove all contingencies. It's like pulling teeth. That relationship is so important. And the way I know I can protect my clients is when they work with the professionals that I have a history with, and I know what that end result's going to be. But this part right here, when you got to remove all contingencies, now you put, if you had $30K in earnest money deposit, you potentially put that at risk. Doesn't automatically go to the seller, but that's a lot of money to put at risk without having a strong agent and a strong loan officer that you trust, okay? Big things there. So then finally we sign what's called a CD, closing disclosure. So once I sign that closing disclosure, I have 3 days, once I sign it, 3 days before I can sign loan docs. Sign loan docs. Loan docs is like the last big batch of papers that have to be signed with the notary. That's all the final documents that get submitted again to the underwriter. They check off on it. We do our final walkthrough usually within 5 days. I'd say like day 28. We do our final walkthrough. It's called our VP. If we did our request for repairs and said fix A, B, and C, and guess what's required by law in Camarillo to be fixed prior to the close of the transaction? What do you think has to be done? This is an important thing to understand.
Termites.
Termites? Nope.
HVAC?
Huh? HVAC? Nope. Fire alarms? Nope.
Smoke alarms. You know what I mean.
Fire alarms? What are we talking about here? Sprinklers? No, it's carbon monoxide detector, smoke detectors, and water heater double strapped. Those are the only things required in Camarillo every transaction. Everything else is negotiable. So unless you're working VA, then there is a condition to have Section 1 and Section 2 clearance for termite. And Section 1 is active infestation. Section 2 could be a stain in the attic, and that could require roof certification. Important things to know. Yes?
Is it still required to have working heat?
Working heat? Yes, sir. So working heat is a requirement for most of these lenders, but by state law, right, on their requirement, it's water heater, smoke detector, carbon monoxide detector. Condition for the loan, she's right, and they want a heat working furnace. What's that? Health and safety. What we try to negotiate is health and safety all across the board. Anything that could be justified as electrical, anything that could be not cosmetic, not because we don't like the popcorn ceilings, but people will say there's potential asbestos in the popcorn ceiling, and if that gets scraped, now there's a potential issue there. Or they'll say with the ducting, right? The old ducting for furnaces were wrapped in asbestos. If it's crunched and it's on our home inspection report, now that could be floating around in the air. So now we want to have that fixed. And if you do it the right way, you got to get a remediation company, which costs extra money to do that, right? So there's a lot of things that can come up. Big things to know. We wrap that up, we do the final walkthrough, we check and make sure if there were repairs agreed to that those were fixed. It's our last chance, not that we ever want to do this, but it's funding. That's where the funds go through. Remember, our loan docs were signed. The money is being wired from the bank to the escrow company. There also could be in your total cash to close. Say your total cash to close was $100,000, right? And you had your original $30,000. Then you have that $70K, you still need to bring your money in, so we got to wire that in before it funds on that day before close, day 30. It confirms, you get your keys, and typically you get access to your property. So that's it. It's that easy to buy a home in Camarillo or Ventura County. That's the gist of it. There's obviously a little bit more detail, but that kind of gives you the nuts and bolts of it. Any questions, I guess, before... All right, thank you guys. And thank you all the agents that came and just everybody who made the effort. I hope there's some good info here. Down payment assistance, just look into, if you want, type in City of Camarillo down payment assistance if you're interested in that. And I would get on the horn quick with that one. All right, thank you guys.